And joining us now to share his commentary on the day's market performance is Vincent Anthonyrajah from Differential Capital. Thank you so much for your time, Vincent. Let's actually get on, because we saw the CAC 40 actually plummeting today, down currently by 1.5%. Of course, we did have the shock resignation of the Prime Minister that had only been in office for a couple of weeks, less than a month, really. What do you make of that situation and also how the markets are reacting to it?
Thanks, Nadine. Good afternoon. I think what's happening in France is really a continuation of, let's call it an unstable political alliance that you see. I mean, France, like South Africa, has the task of grappling with a coalition government and no clear majority anywhere. So I think that sort of instability is likely to plague them. And I think this resignation that we has been into the news is just a manifestation of that.
Yeah.
I think the market's reaction, perhaps is not as bad as I thought it would be.
Okay.
Down just a bit more than 1%. So I suspect for a while, let's call it, this instability has been priced in. And I suppose it's a greater theme that we're seeing in a lot of Europe at the moment is the stock markets last year did really well. But let's just call it the political environments, geopolitically, the issues in Russia just tend to be weighing down on stock market valuations, especially currently.
Yeah, it's actually quite interesting how investors really seem resilient to some of the political moves that we are seeing, because even in the US with that shutdown still continuing, markets also shrugging that off. Well, something that the markets are not shrugging off is the trading update that we got from Mondi today. I saw the last time I looked at that share price, it had plummeted 17%. So the third quarter trading update, the company still emphasizing a challenging trading environment as they had been for a while, saying that conditions are expected to persist for the remainder of this year. Is this a classic case of a company not being able to outperform the macroeconomic landscape?
No doubt Mondi is one of the better operators in that space. And I think there's some really problematic issues facing the paper and pulp industry. I think the demand challenges that they're facing are one thing, but there's also certainly oversupply in certain product lines, which are really challenging for an operator even as good as Mondi. And I suppose this is caught the market off guard, the extent of the weakness that Mondi is taking on board as well. Generally it is the better performer, no doubt, the more quality operation amongst the paper space. But I think this level of weakness is certainly not anticipated by the market, and it's now reflecting aggressively in today's share price moves.
Yeah.
Not to mention taking down SAPI along with it.
Yeah, and it's quite interesting because it has been in a downward cycle for a long time. So it's quite interesting to see that they are still expecting conditions to be challenging. Yeah, investors not really knowing when it will eke itself out of that downward cycle. Well, let's get into property. Sirius came out with a half-year trading update. The CEO saying that the REIT had a very positive start to the year. And actually, interestingly enough, of course, as we've seen, Mondi not being able to outperform macroeconomic environment. Sirius saying that even in the UK, where the environment is challenging, but they are still performing well, and in Germany as well. But I did see that the stock gave up almost 3%. I don't know if it's profit taking because those numbers looked good. What's your take?
Yeah, it's often a function of what's baked in. So, Zinati, I think management teams perhaps overplaying the macroeconomic difficulty. I think certainly from a real estate perspective, things, I would say, have turned the corner globally, and certainly in Europe as well. And I think Sirius, I think the market would have maybe expected slightly better outcomes. Look, it's not the most liquid share as well, so it's difficult to gauge exactly what the market's true views on today's news are. But yeah, I just thought I would disagree with the statement that the environment is, let's call it, very challenging in real estate. I think there's a lot of things that have started to move in their favor, least of which is the reductions in interest rates around the world, which generally are supportive for real estate markets.
All right. Well, before we get to the stock picks by your peers, I want to touch on Gemfields. I don't know if this is one that is on your radar. It's also another share that is not so liquid. They posted the results of their latest auction. It's rubies from its mine in Mozambique. What stood out for you in those auction numbers?
Look, Gemfields is not something that we pay close attention to. But I think for us, let's call it in that space, De Beers is a similar one.
Yes.
And we sort of see the read across Richmond. That environment is quite difficult. So I think just paying close attention to improvements in the auctions for gems as well as diamonds is something that I suppose the market as a whole is hoping for better news from.
Yeah. All right. I hear you on that. Well, before we get to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
New vehicle sales is pumping in South Africa. And the perception is there that it's all of these new Chinese entrants, right? But when you go and look at the detail, it's still brands like Toyota that are the most sold in South Africa, Suzuki, Volkswagen, Ford. And these are all brands that most of these new vehicle retailers and distributors are quite exposed to. Why I like Motus specifically is because it's got a little bit of gearing, which means that once you start seeing revenue coming through, you're going to see a massive impact on the bottom line. The market is forecasting about 5% revenue growth over the next 3 years, but new vehicle sales is up 20% year to date. So it doesn't make sense to me. There's a massive disconnect. Even on those very conservative assumptions, the stock is trading on a forward P of 6 times. So I think cyclically where we are, and just given the valuation, it's a good time to buy the likes of Motus and CMH. Will I hold it for the rest of my life? No, this is something you need to monitor. It's a cyclical stock. The cycle will turn. You need to sell it before it does.
My stock pick is actually a sector. I'm thinking gold stocks as a bundle. I mean, you could really play darts and choose one, and it would probably do well. And what I think is because of high operating leverage, we haven't really seen the effects of this higher gold price going into the bottom line. And right now, because they're very cash generative, I do anticipate that you'll see a lot of corporate action happening in the space, which also is going to affect the share prices of this place. So stocks like Newmont, Barrick, Offshore, even Gold Fields, Anglo Gold, Ashanti, I still think we're going to see incredible numbers in the next reporting season.
Well, very interesting ones there, Vincent. Let's start off with Motus. Are you seeing a brighter cycle coming for this sector?
Definitely. I think if you go back to what I said earlier about the pressure on interest rates now heading downwards with inflation, if anything, surprising to the downside, even in the US. So let's just call it the direction of interest rates is downwards, very supportive for the new vehicle market. And I think, that's definitely supportive for a company like Motus, which needs macroeconomic support. I think the company has also battled in recent years with this sort of Chinese imports, but some of the actions that management is taking right now with regards to the price points of some of the new Tata vehicles that they're bringing in should be supportive. The other thing about Motus, which really stands it in good stead, is it's generating a lot of free cash flow at the moment, which gives them a bit of balance sheet flexibility. And you never know, there might be possibilities of special dividends, share buybacks. And so in general, let's call it the risks seem to be favoring
All right.
Motus in this environment, yeah.
All right, well, let's shift gears and talk about gold stocks. That's been quite a theme as well. Would this, runway still have more legs?
We think so. We've been holders of the gold shares. Start of the year, we had names such as DRD, Pan African, Harmony. Those are the names that we preferred. But we had, like your previous commentator said, we had exposure to pretty much all of them. Right now, we're shifting more towards the names like Harmony and Pan African that we favor at this stage. Just given some of the potential operational risk. I think that's the only thing that can upset the apple cart here for many of the names, is sort of operational incidences. So again, you'd want to have exposure to a broad basket of gold stocks, because if one takes a step back, besides the stocks, the most important theme that is still playing out are the geopolitical risks, the impacts on the gold price, the impact that the potential replacement of US treasuries as a safe haven asset. I think, gold still has a reasonable amount to potentially go. And then the last component is, if one looks at ETFs and ETF exposure for global investors to gold, so gold ETFs, that's still very much at cyclical lows. So let's just call it the institutional investment into ETFs or into gold as an asset class still hasn't yet panned out. And that's usually what causes the last squeeze in the gold price in that particular cycle. So I think net, just the tailwinds seem to be favoring the commodity. And of course, many of the miners are still very operationally levered to that.
Yeah, well, another stock that you are favoring today is Altron. I see it's your stock pick, and of course, it released an interim trading statement today. So just talk us through why that is your stock pick.
Sure. So Altron's, prior to today, actually been fairly weak as a result of a previous trading update that they put out. So their business can be divided into two bigger portions. The main one is what they call their platform business, is really dominated by a division called Netstar, which all of you probably know. Let's call it the competition to Cartrack, which is doing quite well. There's been a good turnaround, really good momentum in that cluster as a whole, what they call their platform businesses. Really strong revenue growth potential and earnings growth potential. However, that's been recently offset by, let's call it, the more legacy businesses, the IT services businesses. And within that, there's a business called Altron Digital Business Services that's been really battling. And that's held back the company. But as you can see from today's trading update, which is a little bit flattered by some accounting adjustments, but by and large, let's call it, the thesis that we're looking at is your platform businesses are really producing strong ROEs, strong revenue growth, which we think over time should just dwarf, let's call it, the overhang from some of those legacy businesses, which are experiencing difficulties, but they are smaller in terms of the contribution to profit relative to your platform businesses. If one compares the main driver of their platform business, which is Netstar, if you look at other listed companies, they're valued at much higher multiples than Altron. And so I think both from a valuation, but certainly from an earnings momentum perspective, there's, we think, a lot of attractive points about Altron.
All right. Well, thank you so much for your time and unpacking what is currently moving investors' money today, Vincent. That was Vincent Anthonyrajah from Differential Capital.